let's get started. So once again, thank you so much for joining us this afternoon. So today we'll be discussing and talking about Canada. We'll be looking at the different tax regimes and schemes within Canada. So we'll cover a few different bits and bobs. We always try to make sure our webinars are jam-packed with information. Before we get started, just a little bit of housekeeping. So after the webinar, whether you're watching live or, of course, if you're watching our recording, you will all get an email with the recording, with the slides, and some additional resources. And of course, you know, there's only so much we can cover in this session today. We will be focusing on a couple of topics. So after the webinar, you know, please do feel free to book a free 15-minute consultation with our business development team. During this consultation, we'll be able to kind of look at your business more specifically and provide a more tailored solution, because as we all know, every business is very different, and what may apply to one will not apply to another business. We will also go through a Q&A section at the end, so we'll cover some frequently asked questions. At that point, I will have my colleague Liam joining just to help with some of those questions, but I'll be running you through the webinar today. So my name is Michaela. I may have spoken to some of you before. I head up the business development team here at SimplyVAT. So really what we do on a daily basis, we talk to all of our lovely clients, prospective clients, and we help to we advise on their cross-border or international tax obligations across EU, UK and Canada. So let's get started. So I'll just get the slides up on my screen. Oh, wonderful. Hopefully you can all see this. So as I mentioned already, the focus for today's session is really looking at the Canadian GST, HST, but we'll cover all the provincial tax registrations as well throughout the session. So really the aim of today's session is just to help you understand, to get you thinking about the VAT, the tax obligations that you may have in Canada as a global seller. We will be focusing more specifically on physical goods and your kind of own website or marketplace sales, just to give that session a little bit of focus. So just a quick look at the agenda, just so you know what to expect and kind of the flow of the information coming your way this afternoon. So we'll start off by covering some of the basics of the different regimes. So we'll look at the GST, HST and PST registrations, and once again I'll explain very shortly what these terms actually stand for, what the differences are. After that, I'll have a very quick slide on this term which is very important in Canada, and this is carrying on business, what that means and how you can determine whether that applies to your business or not. Throughout the presentation, we'll also be thinking and looking at the different registration requirements for your own website supplies when supplying to Canadian consumers. We'll also then spend a little bit of time talking about online marketplaces, how that works. That's very different in Canada, especially if you're kind of comparing, you know, what do I need to do if I'm selling on an online marketplace compared to my own website sales. We'll also be having to think about some common pitfalls. So this is something that we see crop up quite a lot with our clients or prospective clients. So just a few things for you to be mindful of before launching your sales. And then I'll just cover very briefly how we can help you with all of these and kind of, you know, perhaps some of the next steps that you may wish to explore after the webinar. And then, of course, we'll have that Q&A section. Throughout the webinar, you should also be able to put your questions in the Q&A section on your screen. So please feel free to do that, and then we'll try to get through as many questions as we can, depending on how much time we've got. Okay, so I don't know how many of you are currently trading Canada, how many of you are thinking about trading Canada. So Canada offers a lot of great opportunities for e-commerce sellers, whether that's people trying to sell through their own websites or marketplaces. However, it can be a very confusing country to look at, especially from the tax point of view. The reason for this is although we have one country, there's different systems, there's different tax regime that exist within Canada. There's different levels of tax. There's the federal tax and then also tax obligations on the provincial level. And you kind of need to consider all of this when thinking about your expansion strategy. So it can be quite a lot, and hopefully we can help you simplify some of this. So as I've mentioned, we've got three really different types of schemes or regimes in Canada in terms of taxes. So the one that probably you would have heard about the most is the GST. So GST stands for Goods and Services Tax. So this is really the national tax, is the federal tax that's levied on supplies of goods and services across Canada, usually at 5%, but we'll cover the details in a second. So that's the GST. Now, we also have the HST, which stands for Harmonized Sales Tax. And essentially what this is the Canadians' first effort at creating a tax registration that basically combines the goods and services tax, the GST, with the provincial rates. So rather than perhaps having to charge and collect the GST plus the provincial rate as two separate percentages, as two separate items, what the HST aims to do, it aims to bring the two together and only have to charge one rate. Okay. And then the third one, and this is really the one that causes quite a lot of headaches for some of our clients, is the provincial sales tax. So although the Canadians try to encourage all of their provinces to use the same regime and kind of try to extend that HST scheme where possible, there are 4 provinces which were a little bit more stubborn and refused to join this HST regime. So these 4 provinces are British Columbia, Manitoba, Saskatchewan, and Quebec. And what this means that these 4 provinces have an additional provincial sales tax that applies within that province on top of the GST. Okay, so depending on where you're selling in Canada, you may only need to be thinking about the GST registration. You may have to think about the HST, or you may also think about the PST, the provincial sales tax. It all just depends on the flow of goods. Yeah, we'll be covering all of these in more detail shortly. But just to try to explain and put this into context, because I appreciate it can be quite confusing and we are only just started. So this is a handout table, which obviously will be shared with you after our webinar today. And you can see how these different types of tax regimes kind of play out across Canada. So for example, if you are selling into Alberta, so that's the kind of first provincial line in the table, Alberta only follows the GST regime. They do not apply an additional provincial sales tax, and they are also not part of the HST system. So what that means, if you had a customer in Alberta and you're required to charge and collect the sales tax on your supply to this customer, you would be only looking at the GST, which is levied at 5%. Okay. On the other hand, if you are perhaps supplying to a customer in Ontario, you can see when you find the line in the table that Ontario follows the HST system. So they've combined the GST with the provincial sales tax that they used to have into one line. So if you had a customer in Ontario, you were charging, collecting and remitting the sales tax on that particular supply, you would be looking at charging, collecting 13% rather than the 5% in Alberta. Okay. And lastly, if we look at one of our 4 stubborn provinces, let's call them that. So let's look at British Columbia, for example. You can see because British Columbia is not part of the HST, but I do have that additional provincial sales tax, you have to think about GST and PST kind of separately. So we have the 5% GST, and then you also need to think about the provincial sales tax, which is levied at 7% in British Columbia. As I said, this table will be provided to you after the presentation. So let's start with the GST and HST because these are kind of the most common ones in terms of requirements that we come across, and a lot of clients, when they come to us, they've got questions about these two schemes in particular. Well, the good news is that when you register for the GST system in Canada, you're automatically enrolled in the HST system as well. So you kind of don't have to think about it. You don't have to think about it as two separate obligations. You can think of it as one. So the second you get a GST registration, you will also be enrolled in that HST system. So what that means is that your GST registration will cover you for provinces where only GST applies, as well as the provinces where it's then extended to that HST registration. As I've mentioned already, the GST is charged at 5% across Canada. However, in most provinces where HST is used, this is kind of increased to 15% with the exception of Ontario. So if I just go back to my table, you can see all the provinces where it says HST in the federal column and the type tax have 15%, but Ontario is the one exception at 13%. So already one of the very top tips we can give you from today's session: you need to understand where your customers are located in Canada. You need to understand your flow of goods to make sure that you are collecting the right amount of tax on your supplies, and of course collecting that from your customers where appropriate. And we'll cover the where appropriate part throughout the presentation. Now, the standard filing frequency is annual. So if you do register for the GST/HST, most likely you'll be put on the annual filing frequency. So you kind of have to do a GST/HST return once a year. However, monthly and quarterly filings can also be assigned. This will depend on your annual turnover on your applicable supplies, but it will also depend on the type of GST/HST registration that you obtain. And this is where sometimes Canada can be a bit problematic. So within this GST and HST registration, there are two types of the registration that you can obtain. There's the normal GST/HST registration, or there's the simplified GST/HST registration. And it's very, very important that when you are looking to register for GST/HST in Canada, you are applying for the right registration, you know which one applies to you. And the reason for this is because they do slightly different things. So the normal GST registration is much more detailed. There's more that you can do with the scheme, whereas the simplified GST/HST, because it says that in the name, is more of a simplified, it's an easier reporting that you need to do on an annual basis. So we'll go through the two schemes and the differences now. Now, I know this is quite a wordy slide, so of course, apologies, but as I said, we try to give you as much information as we can, so hopefully this is something you can refer back to after the webinar. So in terms of how do I know which of the two registrations for the GST/HST is the right one for me, so I've put together a little table. Of course, there's much more detail than this, and we are really focusing on the e-commerce supplies for non-resident vendors/sellers. So this table doesn't really cover digital platforms or marketplaces, accommodation platforms, or if you're supplying admissions to events. All of that is very different in Canada. So if that's something you need some advice on, get in touch and we can see how we can help with that. But for the purposes of trying to uncover your potential requirements as a non-resident seller in Canada, so the normal GST/HST registration, there are two types of supplies where this registration is appropriate. So the first one really covers non-resident sellers. So for example, a UK business that is carrying on business in Canada, and we'll come back to this term carrying on business in Canada in just a second, with taxable supplies exceeding 30,000 Canadian dollars in worldwide sales over 4 consecutive quarters. Okay, so what that means is if you are a non-resident seller, you are deemed to be carrying on business in Canada, and your taxable supplies go over that Canadian threshold of $30,000 in worldwide sales in 4 consecutive quarters, you will be required to register for the normal GST HST registration. Now, what's very important here to note is the word worldwide. So this would apply to all of your global sales, not just your sales within Canada to Canadian customers. It's looking at global sales. Okay, so yeah, don't be caught out, because this is, it's very easily done because of how it's worded in Canada. The second type of supply covered by the normal GST/HST registration is it really applies to non-resident businesses supplying physical goods from a Canadian location, selling those goods on their own website where the taxable supplies exceed 30,000 Canadian dollars in a 12-month period. So what you'll notice throughout the webinar today, there's a lot of different thresholds within Canada. They are all set at the same amount, which is typically 30,000 Canadian dollars, but they all apply in very different scenarios to very different types of suppliers. So it's very important to understand the difference and which of these thresholds may or may not apply to you. Okay. Now, if you are registered for the normal GST HST registration, what that does, you are also able to use it for your input tax credit. So, for example, if you are importing your goods into Canada, you're paying the import GST at the Canadian border, or perhaps you are being charged GST on your supplies from your suppliers within Canada, the normal GST HST registration allows you to recover that input tax credit on the VAT return. And in terms of when to register, well, usually it's within 30 days of the threshold being exceeded, but of course, voluntary registration is possible. So later on in the presentation, there will be a particular case where perhaps a voluntary registration is something that you may want to consider in Canada, even if you are not required to be registered for GST HST. Okay. So that's the normal GST registration. That is the one that is much more detailed. If you do use this schema, if you're required to be registered for the normal GST HST registration, you may also need to put down a security deposit. So that's something to keep in mind. And yeah, your filing frequency will depend on your turnover. But as I said, annual frequency is usually the one that you'll be assigned at the very beginning. The second type of the GST HST registration possible is the simplified one, but this only applies in a very particular scenario, and that's for non-resident sellers or vendors who are not carrying on business in Canada and who are supplying taxable supplies of digital products, so digital services, to Canadian consumers where the taxable supplies exceed 30,000 Canadian dollars in a 12-month period. So really, to try to put it in simple terms, the simplified GST/HST registration is really for non-resident suppliers supplying on a B2C basis and supplying digital sales. Okay. Now, in order to utilize this registration, you cannot be already registered for the normal GST HST registration. You can only have one at a time. Okay. Now, the reason why, another thing to consider with the simplified GST HST registration is the fact that you cannot really reclaim any input tax credits on this registration, which, if you think about it, if you're only providing digital services to Canadian consumers, so perhaps maybe some, audio or anything like that, you shouldn't really have any input GST to recover, so you shouldn't really be charged anything because you shouldn't have suppliers in Canada if you're only providing digital services. If you are getting charged any GST from your suppliers, that's definitely something I'd be considering, thinking, are they actually charging me this input tax correctly, or do I need to be on a normal GST HST registration? Okay. And in terms of when to register, well, registrations are effective from the date that the threshold is exceeded. So you need to be able to monitor the threshold. And if you're getting close to that threshold, you need to get that registration completed and applied for as soon as possible. Okay, so I've mentioned this term carrying on business in Canada, and as you can see, it is quite important because it can it can have an impact on which of the two registrations you need. normal GST HST or the simplified GST HST. Now, the difficulty with this whole idea of carrying on business in Canada is that even the official guidelines provided by the Canadian Revenue Office, which is kind of the Canadians' equivalent of the HMRC, if you'd like, are very unclear on exactly what constitutes carrying on business in Canada. Unfortunately, it's more of a legal matter than a tax matter, so it's not really something that we can advise on directly. Having said that, there's a lot of resources on the Canadian website. There's a couple of examples, so we would always recommend for you to have a quick look at the Canadian Revenue website, see if one of those examples applies. If you're not sure, we can, get in touch with the Canadian Tax Offices on your behalf. I believe we've done that in the past, but you just need to keep in mind that that is an additional service that we provide, just because it needs quite a specialized expertise to get in touch, explain, and then obviously chase the decision down from the Revenue Office. However, there is one common case that we thought we'd share with you, because we've come across this quite a lot. So essentially, if you are supplying books in Canada and you're supplying books that are not educational, then we know the Canadian Revenue Office will deem you to be carrying on business in Canada, which means that you'll need to register for the Canadian GST HST registration once you exceed that 30,000 threshold on your worldwide or global sales. Okay, so if you're carrying books, I think the definition is a little bit clearer, but then again, it may depend on the book that you're supplying, because sometimes what is educational, what isn't educational, of course, that can be a question in itself. In terms of late registrations, submissions of tax returns, or the actual payment of GST, HST, once again, that is something that we come across a lot, especially when you have a threshold to monitor. We understand that sometimes, you have things going on, you may not always be on top of the threshold monitoring. What you need to understand is that any late GST/HST registrations will be penalised by the Canadian Revenue Office. There isn't clear guidance on exactly what the amount of the penalties would be. I believe they typically just kind of look at it on a case-by-case basis to determine how severe each case is. So if you have realised that you should have been registered for GST, HST, and you were just not aware of your requirements, you did not get the registration in place, we would obviously recommend getting that resolved as soon as possible, and also applying for what's called a voluntary disclosure. So this is essentially kind of like a separate application. That's perhaps the best way to think about it. That's submitted with the GST, HST registration. And essentially what it does, we would request the GST, HST to be effective from a retroactive date, because you have to go back to the date of your initial liability. But in the voluntary disclosure, we would really explain to tax authorities the situation, and essentially we'd ask them to take that into consideration. We'd highlight that the seller is coming in good faith, and we would ask for the penalties to be reduced. So as I said, the aim of the voluntary disclosure definitely is the reduction of potential penalties and interest payments. And I believe it is something that's viewed very favourably in Canada. Of course, the final decision on how much of the reduction the taxpayer sees is entirely up to tax office, but it is something that's very much encouraged by the Canadian Revenue Office. Okay, so that was really it in terms of the GST/HST. So the next slide is looking at the provincial sales tax. Well, the next slides, but we're going to start with Manitoba and Saskatchewan. I've put the two provinces on the same slide because, as you can see, you can almost think of them as twins of each other. So typically what applies in one will apply in the other. So in terms of your registration requirements for the provincial sales tax in Manitoba and Saskatchewan, well, the registration for the PST is required from the first sale of physical goods or digital goods supplied via your own website to consumers located within these two provinces. So what that means is the second you make a sale of either a physical item or digital service to a consumer located in Manitoba and or Saskatchewan, you need to have those PST registrations in place, okay? And just to clarify, if you're selling into both, you need a separate PST registration in Manitoba and a separate PST registration in Saskatchewan. I've put them on the slide together, but they are two different schemes because they are two different provinces. So please just keep that in mind. Just getting your PST registration in Manitoba will not cover you for any liabilities you may have in Saskatchewan. In terms of the standard filing frequency, so once again, we typically see annual filing frequency being issued to our clients, but this may depend on your turnover. And of course, at the end of the day, it's always the decision made by a tax office directly. So please keep that in mind. In terms of the tax rates, so Manitoba is 6%, and once again, its little twin Saskatchewan is exactly the same. So both are 6% for the PST. In order to resolve any backdated liabilities, so once again, because the registrations are triggered by that first sale of either a physical item or digital service, it is quite common, or at least what we see quite a lot, is that customers come to us with backdated liabilities. They may not have realized what their liabilities or requirements are in these two provinces. Backdated registrations are actually, or backdated liabilities, sorry, I should say, actually very common. And there are two options which are actually highlighted by the authorities in both Manitoba and Saskatchewan. So the first option you have, if you do have backdated liabilities in these provinces, is to complete a PST registration with a retroactive effective start date and to file a voluntary disclosure. So essentially go through the same process as you would for your GST/HST registration. The second option you have is to register for the registrations, but not with a retroactive effective start date, and essentially include the sales on your first return in Manitoba and Saskatchewan. Now, what I would say, although there are two options which have been officially highlighted by the tax authorities, to be on the safe side, we would always recommend to basically do it the right way. And that would be the first option, where you kind of register with a backdated start date and you file the voluntary disclosure, just because that way you can be certain that you followed exactly everything the way you should. With the inclusion of sales on the first return, as I said, it is an option that's put forward by the tax authorities. But we can't exactly rule out that there won't be any questions or any small penalties anyway, because you were not registered when you should. So we would always recommend that first option, but there's a couple of options to choose from when making a business decision. Okay, so the third stubborn province on our list was British Columbia. So let's see what happens there. So British Columbia is very different to what to kind of Saskatchewan, Manitoba, what the rules are there. So in terms of your registration requirements, you need to register for the PST registration in British Columbia if you're supplying physical goods which are sold via your own website from inventory located in British Columbia at the point of sale. Okay, so if you are supplying physical goods through your own website to consumers in British Columbia, you only need the PST registration if those goods are located in British Columbia at the point of sale. So kind of going back to what I was saying at the beginning, just understanding the flow of goods, where your goods are located and where your customers are located, is very, very crucial to make sure that you've looked at your requirements correctly. If you are supplying digital goods to consumers in British Columbia, then a registration is required once the annual threshold is exceeded. But in the case of British Columbia, the threshold is set at 10,000 Canadian dollars. So it's not set at 30,000 Canadian dollars, it's set at 10,000. So once again, this is something to be aware of. Make sure you're looking at the right type of threshold for your supplies. Depending on where you sell to, of course. In terms of the standard filing frequency, so annual filing frequency, once again, is a common one across British Columbia, but it may depend on your turnover. So once again, keep that in mind. And the provincial tax rate across British Columbia is 7% for most of the supplies. If you do need to register for the provincial sales tax in British Columbia with a backdated effective start date, because you do have a liability you just did not realize, or you've missed the threshold or anything like that, then you must submit a voluntary disclosure. Okay, you absolutely must do that in order to be able to get the registration through. What will happen? You submit the registration along with the voluntary disclosure. The tax office will assess everything, and then they will tell you or your tax provider what the effective start date is, whether you can put on this return or that return. The offices will make that decision, but you must submit the application along with a voluntary disclosure. Okay, and finally, I saved Quebec for last in terms of our provincial sales tax obligations, because Quebec is another one of those where there's a lot of thresholds, there's a lot of different things to keep in mind. But in a way, it does mirror kind of the GST HST system. So whether that makes it easier or not, I'll leave for you to kind of decide on. So Quebec, of course, likes to be a little bit special. So their version of the provincial sales tax is known also as the Quebec sales tax, QST. So you'll probably won't see any reference to PST in Quebec, but more the QST. That is the provincial sales tax. It's just called something different, essentially. Also, if you look at the tax rate, so all the other provinces had a fairly nice tax rate to remember. So we had 7% British Columbia, but Quebec is 9.975%. So very specific, so very important that you get that right if it applies to your supplies. When you register for the QST, the Revenue Office will typically assign you to a quarterly filing frequency. So once again, that's a little bit different to what we usually see with most of our clients. But once again, monthly or annual filings can also be assigned depending on the case and the annual turnover. So something to keep in mind, but typically quarterly is the one that we see to begin with. Just like with the GST HST system, there are actually two types of QST systems available. So you've got the normal or the general QST system. It is officially known as the general QST registration, but I've just left it as normal for now, just to try to make some sense out of this. And then you do have the simplified QST system, and I'll go through those two in just a second. Now, if you have made applicable taxable supplies and you've collected the applicable QST from your customers, then you will have to register for QST in Quebec from the first applicable sale. Okay, so you'll have to go back and backdate, but that's only if you've made those sales and you've collected the QST from your customers. So whether you've collected or not will make quite a big impact on your requirements. So if you're not sure, then that's something we can have a discussion around. So looking at which QST registration is right for you. So once again, this is very much focused on non-resident sellers supplying either physical goods or digital services. Anything like digital platforms, accommodation platforms, admission to events is not really covered in this webinar. So if that's something that is of interest to you, let's get in touch. Let's have that conversation. So in terms of the general GST registration, this really applies to non-resident sellers who supply physical goods to customers in Quebec, where the products are located in Quebec at the point of sale, and where the taxable supplies exceed the 30,000 Canadian dollar threshold in a 12-month period. But once again, very important, this is really looking at sales into Quebec from inventory held in Quebec. Okay, the 30,000 threshold that we looked at for the GST HST is very different. Same amount, different threshold. Now, this applies to sellers who are not using an online marketplace that is already registered for the general QST system, and we'll come back to marketplaces in just a second. In terms of the simplified QST registration, so there are typically two instances where this is appropriate. So the first one, once again, all about being a non-resident seller not registered for the normal GST HST registration, where you are supplying digital products or services, because Canada calls it digital goods, but obviously in the EU or UK we'd call it digital services. So you're supplying digital services to consumers in Quebec and your taxable supplies have exceeded that 30,000 Canadian dollar threshold in a 12-month period. So once again, we've got another threshold set at 30,000 Canadian dollars, but this one is only looking at B2C supplies of digital services. So very important to look at the differences and the different terminology. The second case where the simplified QST registration may be appropriate, once again, non-resident sellers registered for normal GST HST registration, supplying physical goods and digital goods to customers in Quebec via their own website, where the threshold of 30,000 Canadian dollars has been exceeded in a 12-month period. But in this one, inventory must be stored in Canada but outside of Quebec. So once again, going back to this whole concept of, okay, what is the flow of goods? Where's my warehouse? Where's my inventory located at point of sale? Where are my consumers? Depending on where your products are located, so is it within Quebec? Is it outside of Quebec? But within Canada? This will have an impact on the type of registration that you will need to obtain in Quebec. Okay, so we spoke quite a lot about own websites, but of course we appreciate that a lot of you may be selling already on online marketplaces, or you may be thinking about selling on online marketplaces. So once again, some of the terminology is a little bit different in Canada, but this is very much focused on online marketplaces or online distributor operators in Canada. Now, what you need to know is that these online distributor operators can be responsible for the charging, the collection, and the remittance of the applicable GST, HST, or PST on behalf of non-resident sellers. So if you are a US-based company and you are selling to consumers in Canada through an online marketplace, there will be instances where the online marketplace will do that collection and remittance on your behalf, and you won't need to be registered for the applicable taxes. Okay, this covers physical goods as well as digital services. However, it's very important that you don't just assume that a marketplace or a distribution operator is actually doing this on your behalf. You need to be checking with these platforms whether they are acting in this capacity or not, because they may have slightly different terms and conditions. They may try to get out of that liability and push it on you. So very important that you're checking any agreements or terms and conditions that you may be completing with these platforms. Now, one of these platforms that is definitely acting in this capacity, and we've seen this with all of our clients, is of course Amazon. And quite frankly, a lot of our clients, when they are thinking about Canada, actually setting up on FBA in Canada is kind of the first step in their expansion. So it's a very, very popular setup. Now, what you need to know here is if you solely use Amazon's FBA program in Canada, even if your stock is actually located in different FBA warehouses within Canada, you are not required to register for taxes in Canada. So you would not be required to have a GST, HST, or any of the PST registrations if you only supply through Amazon's FBA program as it stands at the moment. Of course, if you're supplying on or you're looking to trade through the FBA program, but you're looking to have a 3PL in Ontario for your own website sales, you need to consider the two separately, okay? But if you're only looking to do Amazon FBA, there's no actual legal requirement for you to have these registrations based on the current regulation. However, this is actually one of those cases where a voluntary GST, HST registration may be recommended, and it may be something that you consider. The reason for this is typically what we see, if you're looking to hold your goods in a Canadian FBA warehouse, you will have to import those goods into Canada unless you're sourcing them locally from a Canadian supplier. Amazon doesn't really like to get involved in importing. If they can avoid it, they will do their best. So what typically happens for all of our clients is they will be responsible to pay the import GST, which is set at 5% at the Canadian border. Okay. Now, the 5%, of course, depending on your volumes, how often you import into Canada, it can be quite a significant amount of money to have tied up in import GST. You can only reclaim the import GST if you have a GST/HST registration. Okay, and in this case, you'd want the normal GST/HST registration because that's the one that allows you to reclaim your input tax credit in Canada. So this is one of those cases where perhaps even if you don't have to, getting a tax registration may be very beneficial for you. What you need to be aware of, however, is once you are registered for the GST/HST in Canada, you will then be required to charge, collect, and remit the applicable GST/HST on your applicable supplies on Amazon. The second you get that GST/HST registration, that responsibility will shift from Amazon to you. It is your responsibility. So you have to make sure that you put your GST/HST number in Amazon and that you are collecting that GST on your supplies. Because if you're not, you still will be expected to pay the GST/HST, but it'll be coming out of your own pocket, which is of course not ideal. This, however, does not impact any of your provincial sales tax obligations. So if you decided to register voluntarily for the GST/HST for the purposes of the Amazon FBA program, and once again, we're going to assume this is the only type of supply that you have in Canada, your GST would cover sales to provinces where GST/HST applies, but Amazon would continue to charge, collect, and remit the PST in Saskatchewan, Manitoba, British Columbia, Quebec, if applicable. Okay, so yeah, the two need to be considered separately. Okay, pretty much there for today. I've just got a few more slides. So some of the common pitfalls to avoid, well, I've kind of gone through these already, but just to bring it all on one slide. So really, I would say not understanding the different thresholds across Canada, whether these apply to your business, is kind of one of the top ones. As you've seen throughout the presentation, there's about 10 different thresholds set at 30,000 Canadian dollars. They all apply in very different instances. They all look at different types of sales. One is your global sales, one is sales in Canada, the other one is into Quebec, yada, yada, yada. Very important that you understand these different thresholds and whether they apply or not. The second one is, of course, not considering whether your business is deemed to be carrying on business in Canada or not, which once again, I appreciate is a very difficult question for everyone in the industry. And then, yeah, another one that we see is really only considering the GST/HST obligations. I think especially when you're kind of selling physical goods, you're trying to get them in Canada, of course, the GST/HST is the one that will be kind of on your mind the most because of that import GST that you'll be paying at the border. But don't forget, there's also that provincial sales tax liability in Saskatchewan, Manitoba, Quebec, and British Columbia. So just because you get registered for the GST and HST one doesn't mean that the other ones are covered. You need to think about them separately and see whether they apply depending on your business model. And lastly, another one that I tend to see quite a lot is really getting registered for the GST/HST number, especially if you're an Amazon seller, but not actually then supplying that GST/HST number to platforms like Amazon. It is absolutely crucial that you do this step and you do not forget about this, because as I said, the second you have that GST/HST record, which will be noted by the Canadian Revenue Office, that liability is shifted. So if you're not charging and collecting the GST and HST, you will still be expected to make the payment, but it'll come out of your own pocket, which, you know, if you're looking at the likes of Ontario, which is 13%, or some of the other HST registrations set at 15%, that can be quite a big chunk out of your margin gone to taxes when you haven't really considered that. And yeah, before we jump into the Q&A session, just wanted to kind of go through some of the services that we can help you with. So obviously the whole point of us being here today is to try to help you with the Canadian tax requirements. So as I said, we do offer free 15-minute consultations to prospective clients or existing clients. So if you're not sure whether you do have any liabilities in Canada, or if you think, oh, do you know what, I think we may have one, not quite sure where to take it from here, feel free to get in touch with us. Feel free to book that free consultation. There's no commitment. It's just really to have that initial discussion, see how we can help, or perhaps depending on the complexity, pass it over to someone a little bit more technical. Once we have determined any liabilities for you, we can help with the registrations for GST, HST, and all the 4 provincial sales tax registrations as well. And then we will help our clients with the ongoing reporting across Canada, depending on their filing frequencies, whether they have the simplified or a normal registration, are they reclaiming, are they not reclaiming? So that's something that we help our clients with. And of course, we can also provide ad hoc or bespoke consultancy services for clients who may require that service. Not all of them do. And yeah, on top of that, we can also help non-resident businesses with their UK and EU VAT requirements. So Canada's not the only country that we handle, but of course for today, that is the main focus. So yeah, those were kind of my slides for the webinar. So what we'll do, I'll just get my colleague Liam to pop up on the screen, and then we'll go through some of the commonly asked questions. We'll go through any questions that you guys may have asked during the session, and then yeah, hopefully we can finish on time.
Hello. Well, thank you for that, Michaela. That was really insightful. As you've mentioned, obviously, we'll be going through a few questions. I've managed to get a few from some of our clients that we've been talking to. I think one of the main ones that we get is if someone's registered themselves for GST or HST, how do they know which registration they're on if they can't quite remember or they weren't clear about what they kind of, registered for at that time?
Yeah, no, of course, great question. Yeah, we do see that quite a lot. I would say kind of the best course of action is always to try to go back through any registration documentation that you may have received, because if you've got a tax number, if you've got your GST, HST number, it would have come from somewhere. So whether that was an email, a letter, so try to recover that correspondence because it'll have a bunch of useful detail on there. If you are not able to recover it, or sometimes what we see, there's change in staff within company, of course, things may get a little bit confusing. That's happens to all of us. Usually there's a way of identifying that just by looking at the business number that you will have been issued. So typically if your business number ends with RT 3 zeros and a 1, that's a normal GST/HST registration. But if you got 4 9s at the end, that would indicate a simplified GST/HST registration. But once again, what we would want to do, we'd want to probably look at the number. We want to look at your business operations as a whole, just to make sure that everything corresponds. For example, you're registered for the right scheme. Not only is the tax number this one or that one. So yeah, we'd take a few things into consideration.
Perfect. And with that as well, if I just sell into Saskatchewan or Manitoba, for example, but I'm not, do I need a GST as well? Or, how do I know when that's going to be triggered? Because obviously we know that Saskatchewan and Manitoba are both from the first kind of like physical sale. So do I automatically trigger that GST, or do I have to kind of monitor something?
Yeah, so once again, and I know it can get quite complicated with all these different schemes, but my kind of best advice is to kind of look at them separately and look at your flow of goods and then all these different registrations. Because yeah, just because if you've triggered a registration requirement in Saskatchewan, Manitoba, doesn't always mean you have the same requirement in GST for, let's say, GST, HST, or perhaps British Columbia, Quebec. It really just depends on how is your supply completed. Is it own website? Is it marketplace? Is it B2C? Sometimes we also see what we call mixed supplies, where you may have a digital product as well as a digital item as well as a physical item. So all of that needs to be considered. So I wouldn't just rely on the fact that if I need one, I need all of them, or if I don't need one, I don't need any of them. But once again, we can definitely get that initial consultation booked in. And then just have a look at your your business specifically.
Perfect. And yeah, you mentioned obviously there like digital services on their own kind of website. What are the requirements on those? Let's just say if I do, does it differentiate really if I kind of sell it physical and digital, or if I sell them bundled? Like, do I need to consider anything on those ones? How would that look like?
Yeah, so that can make a very big difference. A lot of it will sometimes just come down to also, as a supplier, how do you actually market your offering? So especially where you are perhaps providing a mix of the two, so perhaps a digital item, so maybe some sort of a tracker with a subscription element to it. What is the main supply? What do the customers pay for? Do they pay for just the tracker, just the subscription? Two, can you have one without the other? So there's certainly different things to think about. And for example, just like in the case of British Columbia, it's important to consider both, because we had different requirements based on if you're selling physical goods and different requirements based on if you're only selling digital supply. So yeah, definitely important to consider both. Sometimes different countries, not only Canada, what counts as a digital service, it may vary country by country, which of course can add an element of complexity. So once again, let's just have a conversation. We'll probably want to ask you a bunch of questions just to understand exactly the sort of service that's provided and the item.
Yeah, no, I think that sounds perfect. And with those kind of different rules as well, what are the rules if I supply business to business instead of direct to consumer sales? Does it differentiate? Is there anything I need to look at there?
Yeah, so there's obviously just like if you're used to selling to businesses in UK, Europe, or perhaps some of the other geographies, the B2B supply is always very different to what happens on the B2C level. In Canada, once again, there's a bunch of different legislation on this, which is very province specific. There are some provinces where actually B2B registrations are exempt altogether, so it's not really something you have to worry about. In other provinces, it's something that, if you have, let's say, a GST registration and the normal system, you then have to also take your B2B supplies into consideration, depending on whether you supply just B2C or a combination of B2C, B2B. It may also have an impact on which of the registrations is being applied for. So if you are discussing with a tax provider, just, make sure that you mention that you do have those B2B registrations, because then we'll just be trying to understand, what is the flow of goods again. We appreciate that sometimes what one client may want to do in terms of applying their B2C compared to B2B may be different. So we'll have a look at that, and then we'll be able to provide more bespoke advice. But yeah, there are differences for sure.
Perfect. And just one final question that we tend to get quite often within Canada, is there an option for me to choose how often I'm filing those tax returns within kind of Canada? I know, for example, can I do monthly? If I want to do monthly, can I do everything annual? Is there any kind of main differentiations there?
So there are kind of commonly observed conventions that we see in terms of the filing frequency. So kind of, what is typically the case. So as we said, GST is typically annual. For example, with GST, if you're on a simplified scheme, so you're supplying B2C digital services, then it is just the annual filing frequency. Whereas if you're on the normal GST HST registration, you do have the option depending on annual turnover. So it's not typically something that we've been able to request. So we can't typically go to the tax and say, oh, we'd like a monthly filing frequency for this customer. To be quite honest, a lot of them are very happy with the annual filing frequency, just because of what that means for their kind of the admin and all the information they have to provide. But yeah, it does depend on the turnover, and it's also something that can be determined by the tax authorities. So sometimes what may be the case is if you perhaps get a bit late with your returns, you may be bumped into a slightly more frequency, like quarterly or monthly, just to make sure that those returns are being submitted on time. Yeah, hopefully that answered that question.
It did indeed. And yeah, thank you. That was all the kind of frequently asked questions that we got. And for any questions that we didn't get to as well from the kind of audience, we'll be able to kind of look at those and get back to you separately, surely. But thank you. That was everything from my side.
Great. Well, thank you so much for the questions, Liam, and thank you to all of our attendees again. I know it's a lot of information, so we'll be in touch with some resources. And yeah, as I said, any further questions, anything at all, then just feel free to get in touch with us, either with the obviously the business development team or your client manager if you're an existing client. Thank you very much. Have a lovely rest of your afternoon, and yeah, thanks for your attention this afternoon.